My name is Christopher Hussain. I'm the CEO and founder of RealKey. We are automating mortgage processing and underwriting through focusing on document collection, review of those documents, as well as automating the communication amongst all the parties involved, not just the lenders or the borrowers. We've been working on this for 7 years. Yeah, so I've been doing mortgages for quite some time. I was the actually top mortgage originator in the US for 2 straight years during the housing crisis, actually. I am also not only one of the only people to have held a license in all 50 states, but I am the only individual that we know of that's originated, processed, and underwritten in all 50 states. So I kind of have a unique background and viewpoint to the entire ecosystem. Being that I've worked with more lenders than anybody else on really unique loan programs that many people typically either avoid or have never even been educated or know exist. So besides that, I also helped found Syndio, which was an online mortgage brokerage. It's now part of Freedom Financial. They were acquired back in late 2017. And prior to that, also had a large repossession company that I ended up as the interim CTO for their early stages after going through and selling brokerage that I owned during the housing crisis. Yeah, so obviously having gone through and done more mortgages than anybody else at the time, I really understood what was the bottlenecks for not just myself, but for other mortgage brokers and lenders, community banks, credit unions, how to go through and not only close loans faster, but with less effort. So really focusing on the efficiency and trying to automate a lot of manual processes. So that was really the foundation of RealKey. And through our learnings, part of it was also being open-minded. Our industry tends to be stuck in the Stone Age, and a lot of people are very adverse to trying new things. And so one of the things that we did was we looked open-mindedly at the industry and just the process and said, why are we even taking loan applications online or over the phone when we need documents to support anything that someone says or even types? It's really hearsay. And so we wanted to try and have documents be at the center of the process rather than the loan application being at the center the way it is today. And that's part of our vision. Right now at the company, we actually relaunched the company in October of last year. We are currently raising an A round at the moment, which we just got a term sheet for at the time of this recording. And we're looking to go through and fill that out to accelerate a lot of the stuff that we've been working on so we can work with larger enterprise clients, do more integrations, which is really central to fintech in general. And quite honestly, a bit of a barrier to entry when you do talk to more enterprise clients, because there's a heavy lift in order to do that. Can be a bit of a distraction from the core product and any feature enhancements, product improvements, or just generally new items that we had already planned to go through and prioritize. Additionally, there's a lot of vendor diligence involved, and that too can be a distraction. We're really excited for closing out this round. Will give us the resources to go through and to address that user base, which will really go through and allow us to grow exponentially from there, being that the product does have quite a bit of a network effect, and that we don't just deal with our paying users, mortgage brokers, lenders, and banks, but that we also, for every transaction, are inviting in to meet requirements, title escrow companies, insurance companies, real estate agents, employers, CPAs, accountants. You can imagine just how many of these users can drive more business to our paying users, and also drives adoption of the product too. So, I mean, right now, obviously, rates are the highest they've been in almost 2 decades. And a lot of these home buyers have never seen rates like this in their entire lifetime. Yeah. Additionally, you couple that with the fact that, real estate agents, I would say that they're responsible for quite a bit of this, driving up the prices of houses and trying to go through and using inventory as a reason for it, when obviously a lot of home builders have pulled back since the rates went up, suggests that may never have really been an issue. It might have been really driven by the artificially low rates that we've had due to COVID. All this has created a perfect storm for mortgage brokers in that everybody refinanced over the last couple of years into these low rates. A lot of home buyers were expecting to be able to afford a certain amount, and therefore they pulled back from going through and being able to afford the house of their dreams. And so you're seeing a lot of business go away. At the same time, though, for us, we are a product that focuses on efficiency, on reduction of costs, on going through and saving money, which is exactly what all of our end users are trying to do right now. And so for us, we're not really affected by this. In fact, we're actually growing substantially. And it's a time when we really want to take advantage of the market to grow our market share. And that right now, brokers, lenders, all these mortgage originators and processors are going through and they're less busy than they've ever been. And they are trying to focus on how to go through and save money and improve efficiency, not only now, but also for when the next boom happens. They definitely saw that over the last couple of years, they had plenty of business, but the efficiency in going through and getting those loans done was sacrificed at that time. So that's part of what we're solving for. I'd say we're not really affected by this, but it is definitely affecting our market, most definitely. Yeah, so I mean, it's very interesting for anybody that's been through the fundraising process, especially those that don't come in with necessarily an advantage of having either had prior exits, experience in investments, or having gone to one of those universities that has significant funds that are available for their alumni. We've had to really growth hack and find our investors from scratch. And so it was very difficult, especially for anybody that has a product that is not launched, that does not have any traction. And we had to go through and we had to prove that we had done our diligence on our end and de-risked and done our research and found that product market fit and have a product that is differentiated from anything else that exists. A lot of our early stage investors, that is why they invested, was they really invested in us as a team and in the amount of work and pre-work that was done to the product launching. Fortunately, besides my own background as the top mortgage originator in the US and all that we mentioned earlier, we have a very talented team. We have, TurboTax design lead into its principal design strategist, quite literally the guy who made taxes easy for you. We've had Oracle Director of Engineering, Barracuda Lead Software Engineer. We've got one of the most connected people in real estate, one of the most connected people in insurance. We have the top originator for the last 3 years, head of operations. So it's all really thought leadership, and that was what was invested in. Now, moving forward from there, we had more learning that was done, and that was why we chose to relaunch the company back in October, was that through a lot of our findings, we found that it was important to focus on documents, on automation, on true intelligence for lending, on collaboration for not just borrowers, which is usually the focus, but for all parties, which really made our product more complex, created a barrier to entry, and really improved on the value of what we were providing our end users. Additionally, going through and looking at that, I think that that's where they've been very happy, and that's why we've been going through and seeing such growth with the product, is that has paid off in dividends. Now we are at that next inflection point where we're seeing the market has shifted in our favor, and we really want to just take advantage of that right now while the market is hot for us. Yeah, I think we gave a pretty good idea of the leadership team a little bit earlier as far as explaining their background, their experience. Right now, we are using a portion of this capital to go through and to recruit for some very key hires, some of them being specifically, a new director of engineering. We are looking for additional leadership in our sales team. And then we're also, of course, looking to go through and to build and grow our internal engineering team as well. We've done a lot of outsourcing, and now we really want to focus on ourselves moving forward. That's a very loaded question. I would say that it depends on the kind of loan that you're getting. If you have a complex situation, you're going to really want to look at a mortgage broker because they are going to have more options available to them, meaning they can work with more lenders, they have more loan programs. If you go to a bank, credit union, community bank, whatever it may be, a financial planner, wealth manager, uh, they typically have access to one set of loan programs. And so if you don't fit in their box, you're out of luck. With brokers too, they can pick and choose which lender has it's not about the rate, it's about the cost of the rate, which most people don't understand. Whenever you talk to an everyday person, when they think of getting a mortgage, they say, I want the lowest rate. And that's really not what they want. They want the lowest combination of rate and fees because every lender has access to the same rates. It's what is the cost or the credit associated with that. And that's how you get, no cost loans is the credit can cover those costs. A broker can shop that around and has access to more options. But at the same time, if you go to your bank, especially some of the exclusive lenders, when I say exclusive, that means that they manage your wealth, which not everybody has access to that. They typically give you extreme discounts to the mortgages they provide. It's kind of a loss leader, almost like Costco chicken is, where they're trying to go through and to get you into that mortgage really with the aspect of continuing to maintain or to earn the business of managing your overall assets and finances. So that's a good way to go through it. And I would say approach it is look at brokers, look at banks, look at lenders that also have relationships with the rest of your finances. Yeah, I think that everybody has different risk profiles. Also, everybody has different experiences. I'd say that today we are sharing our data all over the place. If you think that your data is private, in general, it is accessible somewhere and it's being used in all sorts of ways. Ideally, the companies that are using that data are using it for your benefit. And that's obviously our intention, not only now, but in the future, is really to improve on people's financial situations, obviously with no intention of worsening it. The data is very, now what you did mention in there is also its security. Data security is heavy focus, especially in finance. That is a major barrier to entry. So every single bank and lender that we are dealing with has their own security requirements, and we are obviously having to meet those as a company. So whatever you're willing to upload to your bank or lender, you should be feeling safe uploading it to us as a partner of them. And we are definitely going to be more secure than your email or any particular drives that you may have because we are following a heavier set of requirements than you would have otherwise. It's far more secure. We are only sharing it with people who are invited to access your transaction and nowhere else. But be mindful, of course, if they download your data to their own desktop and their system gets hacked, that is unfortunately something that Realkey would not have control of, and you wouldn't have control of that anyway. So again, this gets back to just an understanding of security, of risk, of privacy, and knowing that it's really hard to control all of it, but there are a lot of checks and balances that are there for anybody in any situation. It's no different than your credit card right now. Fortunately, because of the nature and amount of hacks that are out there and capturing of data, you are protected, where if your credit card was stolen, you will get reimbursed for everything that's there. And it's not very hard to do that. So just keep that in mind too. Again, everybody has their own different risk profiles, but they should not really be worried about sharing their information and data. It's about as secure as it's going to get. A loaded question, and I'm going to be honest on it rather than trying to pander to real estate agents and brokers. I honestly don't think it's a great time to buy a house. I think that we are heading directly into a housing crisis. I think that there is a perfect storm, as I mentioned at the very beginning, and as you alluded to, where again, housing is at the highest it's ever been. Anything that goes up 30% plus in a single year is bound to come crashing down just as quickly. There was a lot of factors involved, whether it was the rate environment, whether it was real estate agents who were going through and selling an inventory issue that may not have actually been there that was artificial. There is a lot of very empty properties that are out there as well, where we have a lot of overseas investors. I think that a lot of this is coming to a head. My side hobby outside of Realkey, taking up all my time, is rare beer, whiskey, wine collecting, and drinking, of course. What really got me into it was that my wife worked for a large winery and conglomerate of wineries in Napa for 8 years. And she said, "Hey, I'm into wine. You might want to try something interesting in beer." And whenever I do anything, I kind of go over the deep end on it, similar to with Realkey.